What's going on with EMs?
Well, there's a growing concern that the U.S. will go ahead and hike that interest rate that has been near zero for years now. It would be the first hike since 2006, and that near zero interest rate was what boosted demand for assets in developing nations. So now stocks have been tumbling as we get these the stream of positive data out of the U.S. Of course, we had payrolls data last week showing some positive numbers there, and not to mention that this week we're expected to see some improvements in consumer sentiments as well as retail sales. So as you can see in that graph, emerging stocks tumbling this month, down 5.7%, 11 straight days of decline since May 22nd, and that would be the longest losing streak since September 1990.
Completely different story when it comes to Chinese stocks, though.
Completely different. The Chinese stocks, of course, soaring. They added $6.5 trillion in value just in the past 12 months. And if you consider $6.5 trillion, that's like you could buy the world's biggest 21 of the world's biggest companies with that $6.5 trillion. So it's a huge rally that you've never seen anywhere else. You can see there in that chart, China is now nearing its value of $10 trillion for the first time ever. It's bigger than the markets in Japan, the UK, France. And you can see that these expectations that the Shanghai Composite mainland shares will be included in the MSCI indexes. And that decision is coming this Tuesday, later today. That's fueling stocks as well, not to mention that we have more retail amateur investors as well as more IPOs. We have new Chinese firms raising at least $56 billion this year. And the bulls here are saying that as long as the Chinese government wants to sustain that rally, so indebted companies can actually raise money in the equity markets, then this rally is here to stay.